There is a lot going on in the market, and we only have a few minutes to talk about it. So first off, what's going on, guys? It's Ricky. I hope that you guys learned something new. And if you do, please consider dropping a thumbs up and subscribing if you feel like we earned it. The first one that I want to talk about is HIMS. HIMS at one point was up over 20% on the day. Again, HIMS is already a very bullish stock for 2024 and 2025, going from lows of $5 per share to highs of 70. But really, it's been this year that it's just catapulted to new highs. So it pushed up to $70.50 per share based off of the news of a new acquisition. Hims and Her to offer at-home blood draws and lab testing with the new acquisition. Don't get me wrong, this is good news. So if you're asking, Ricky, then why are you choosing to potentially short it? Well, not potentially. I already opened a short position after it pushed up. I saw that it was running, and during today's live trading session, I ended up getting in right around $68 to $67 per share. And as it began to sell off, I began to take profit. And then as it rips up, I open short again and take profits. I think just like anything, as it could overreact on the downside, it can also overreact on the upside. It pushed up 20% based off of this news. And this is already when this stock is incredibly overhyped up. I mean, it doesn't take a rocket scientists to understand. If you ever look up the company and pay attention to the PE ratio of what the company is producing versus what it actually is making. Again, this is a company that has a revenue of 1.2 billion, trades at 126 times its earnings. Its net income is 101 million, yet it is currently at a market cap of nearly $15 billion. Within a very short period of time, it's been very aggressive, which of course can be attractive to a lot of investors, but then you also can't be surprised why there's such a large short interest on HIMS. I think about 30%, there's a 30% short interest on HIMS itself because of how incredibly overbought it has become within a short period of time. Let me make this very clear. Just because it's overbought doesn't mean that it has to pull on back. This stock can continue to uptrend. But because of how much downside potential there is, even just on the day, I let it rip up 20%, or when I became aware of it, it was already up nearly 20%. So I saw there to be huge downside potential, so very lucrative to short, and my risk is quite minimal in the sense of I watched my position size, and if it made new highs, I can quickly cut losses. So again, the risk to reward ratios made sense to me. It met my criteria, and that's why I was okay with shorting it with the dollar amount that I can tolerate. I want to remind you, just because I choose to short it doesn't mean that you need to. This is an incredibly volatile and risky stock. It's very bullish, and it could quickly, as you guys can see, go bullish, right? So just because I'm choosing to do something, I want to always remind you, never means that you should do the same. I'm very excited to see how this one actually ends up playing out. The only other one that I'm also paying attention to is SMCI. SMCI, I do not plan to carry this short overnight. This is just a stock that continues to get rejected right around $60 per share and then sold off to lows of $55. It obviously became incredibly overbought within a short period of time, so I also see some pullback potential, but of course, everyone's waiting for them to file, and they have up until the February 25th for them to actually file. So there's been a lot of hype behind it, but as NASDAQ kind of began to consolidate, as the overall market waits for the Fed minutes to be released today at 2 p.m. Eastern time, then again, there could be some selling pressure that gets implemented. And if the markets begin to sell off, then so can SMCI. And SMCI, being incredibly overbought within a short period of time, could sell off more than many of the others, right? So that's why I'm choosing to pay attention to this. Let me remind you, just because I'm choosing to pay attention to it does not mean that you need to. I want to make sure that you're well aware of that. The only other one that I want to make sure that you guys are paying attention to is Carvana. Carvana is set to report earnings today. Carvana is an incredibly bullish stock for 2025. If you guys have not seen it, and also for 2024. Carvana has one of the most insane PE ratios of trading at 2,185 times its earnings. This is a company that produces $45 million in net income a year, yet currently trades at a market cap of $60 billion. You don't think that it's overbought? Again, everyone's entitled to their own opinion. That's fine. It went from $3 per share to highs of $290 per share, and it can still keep pushing. Don't ever think that, again, because something is overbought, it can't continue to skyrocket. It's going to release earnings today after the market closes, and I just want to see. I don't necessarily plan to trade it, but I just want to see. Does it continue to skyrocket and go and try to make new highs at $376 per share, or Is this the beginning of the end, and does it actually start crashing because fundamentals are just not there? So I'm excited to see. It's going to be at market close today, so please make sure that you pay attention to it if it's something that, again, meets your criteria. So very excited to follow up. Just wanted to make sure that you guys were aware of Carvana, wanted to make sure that you guys were aware of the Fed minutes, and then also of the 2 stocks that I'm currently shorting, and I'll make sure that I keep you guys posted. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take care, team.